0. That's the inheritance tax King Charles paid on everything he inherited from his mother. Not avoided, not sheltered, not argued in a courtroom. 0, because the law says 0. Now the other number, £400,000. The death tax waiting on one ordinary 400-acre family farm in England. A farm that clears about 70 grand in a good year. Same country, same tax, same law. This isn't about whether Charles deserved it. It's about one rule book with 2 pages, and the page your family lands on decides whether the farm survives your funeral. That's who grows your food. I'll show you that working in 60 seconds, and you can check every step of it yourself. So hold onto 2 things. A deal signed in 1993 with no vote in a common statement almost nobody read. That's the page that writes the King's Ledger, and the tax shelter Jeremy Clarkson bragged about buying and what the government has just done to it. If you like a British story with the receipts attached, subscribe. Every number in this one is on the record. Right, the working. On the 30th of October, 2024, the Chancellor, Rachel Reeves, stood up at the budget and changed what happens to a farm when the farmer dies. For decades, agricultural property relief meant a working farm passed to the next generation whole. No death duties. That was the deal that kept family farms in families. The budget capped it. Then on the 23rd of December, 2025, after a year of protest, the government raised that cap from £1 million to 2.5. It came into force on the 6th of April this year. It isn't a proposal anymore. It's the law you farm under now. Here's how it works. The first 2.5 million of your farm passes tax-free. Land, buildings, machinery, livestock, the lot. Everything above that gets half relief, which means an effective 20%, where the rest of the country pays 40%. 20%, half price. That is the government's whole defense, and it's a fair point. So let's test it against a real farm. Take a widow farming 400 acres of arable in England. Average arable land runs about £9,500 an acre, so that's 3.8 million in dirt before she owns a single thing that moves. Add the farmhouse, the grain store, the sheds, and a tractor that cost more than most houses. Call it 4.5 million. 2.5 is clear. The 2 million above it gets half relief, so 1 million is taxable at 40%. £400,000. The government lets her pay it over 10 years, interest-free. £40,000 a year. And the average English farm business made just over £71,000 in 2024-25, a figure DEFRA expects to fall. More than half of everything the farm earns, every year, for a decade, to pay for a death. That's page 1. Nobody's fiddling it. That's just the rulebook. On the 19th of November, 2024, they brought the tractors to Westminster. 13,000 people by most counts, and one police officer on the day put it at 20,000 in Whitehall. Farmers who had never been on a protest in their lives, standing in the freezing wet outside Parliament with their children holding the signs. The papers called it the tractor tax, and the name stuck. The government's answer then is its answer now, and to be fair to them, they have the figures. On the Treasury's own numbers, raising the cap halves the number of farming estates that pay anything, from 375 a year down to 185. Around 85% of estates claiming agricultural relief will pay no more inheritance tax than they would have before. Most farms won't pay, that's true. But run that sentence again slowly, because most farms won't pay is not the same claim as no farm gets broken. 185 estates a year is 185 funerals that arrive with a bill attached. And the farms that trip the cap aren't the hobby paddocks. They're the ones with the acreage, the ones actually growing the food. Because the rule doesn't ask what you earn. It asks what your land is worth. And a farmer can be a millionaire 5 times over on paper and still not have £40,000 spare in the account. Asset rich, cash poor. That isn't a slogan, it's a balance sheet. And this is where Jeremy Clarkson walks into the story, because he said the quiet part out loud years before the budget. In 2021, Clarkson told the Sunday Times that the critical reason he'd bought 1,000 acres in Oxfordshire was tax. Land was the one thing you could leave your children that the taxman couldn't touch. As he put it, land gives you pleasure, feeds people, and the government gets nothing when you die. Now this matters because we deal in what people actually said. When a BBC reporter put that quote to him at the protest, he backed away from it. He said he'd really bought the farm to shoot, and the tax line just made a better story. Fine, take him at his word. It doesn't rescue the point, it sharpens it. Because the shelter was so well understood that the loudest broadcaster in Britain could joke about it on the record, in a national newspaper, and nobody blinked. That's how ordinary it was. Buy land, keep it in the family, pay nothing. And the government's stated reason for capping the relief was exactly that, to stop wealthy buyers parking money in fields they never intended to farm. So the budget closed the door. It closed it on the investors, which is what it was aimed at. And it closed it on the widow with 400 acres at the same time, because the rule doesn't ask why you own the land. One door shut for everyone. Almost everyone. Quick pause, because the other page of this rulebook is next. The one signed in 1993 with no vote and no cameras. It's the best part of this story, and most people have never heard of it. If you're getting something out of this, tap like and subscribe so more people see what's actually in the ledger. Right back to it. The 11th of February, 1993. John Major stands up in the Commons and makes a statement on royal taxation. The headline is that the Queen has agreed to start paying income tax voluntarily. The papers run it as the Queen agreeing to pay tax like everybody else, and the country moves on. Underneath it sits a document called the Memorandum of Understanding on Royal Taxation. And in that document is one sentence that does more work than any other line in this story. Inheritance tax applies to bequests and gifts made by the sovereign, except transfers of assets from one sovereign to his or her successor. Sovereign to sovereign, exempt, effective the 6th of April, 1993. The reason was given at the time, and it isn't a stupid one. A hereditary monarchy taxed at 40% every time a monarch dies stops being a hereditary monarchy inside a couple of generations. Whether you buy that or not, that's the argument on the record, and there was no vote on it. Then September 2022. The Queen dies and her private estate, Balmoral, Sandringham, the horses, the art, whatever else was in it, goes to her son. How much? Here's the honest answer. Nobody outside that family knows. The Sunday Times rich list had the late Queen at around 370 million. The Guardian put the King's private fortune at 1.8 billion, a figure his spokesman disputed. The most recent rich list has him at about 640 million. And the reason we're all guessing is the second thing worth knowing. Royal wills are sealed. Prince Philip's was locked away by a High Court judge in 2021 for 90 years. The Queen's lawyers had asked for 125. There are more than 30 sealed royal wills sitting in a safe in London right now. So, an unknown fortune in a sealed will, taxed at zero, under an agreement no MP ever voted on. Then there are the duchies, and this is where the two pages sit side by side. The Duchy of Lancaster funds the King. Net assets on the last accounts, £687 million. The Duchy of Cornwall funds the heir, which is Prince William now. Net assets, 1.1 billion. They don't pass by will, they pass with the title. Nobody inherits them, so no death ever triggers a bill. Not once, not ever. And in fairness, because this channel does the whole ledger, the King and the Prince both voluntarily pay income tax on what those estates earn them. Voluntarily, which is rather the point. The farmer's 20% is compulsory. The King's income tax is a choice he makes, and a choice he could unmake. The farmers got a budget. The Crown got an agreement. And there's one more difference nobody mentions, and it's the one that decides who's still farming in 30 years. The farmer's allowance has a clock on it, 2.5 million, and it resets once every 7 years, the same as the ordinary nil rate band. Hand the farm over early, and you have to survive 7 years for it to count. Get the timing wrong, a stroke, a bad harvest, a heart attack at 61, and the bill lands anyway. So a farming family doesn't just farm, it plans its own deaths. Solicitors, trusts, life insurance taken out to cover a tax bill on land nobody has any intention of selling. The Crown's page has no clock, no cap, no threshold, no 7-year rule, no planning, no deadline. The exemption never runs out because there's nothing for it to run out on. The estate doesn't die. One rulebook. On page 1, a family measures its life in 7-year blocks and hopes the timing is kind. On page 2, the question doesn't arise. So, 0. Remember that number the next time you hear the family farm called the backbone of this country. Because none of this is about whether Charles is a good man or whether the monarchy should exist. That's a different video and a different argument. This one is narrower and colder than that. One rule book, 2 pages, and the page you land on was decided before you were born. Page 2 was written to stop an institution being taxed out of existence over successive generations. That was the stated reason in the Commons in 1993. Read it again, and it's an argument about continuity. About not letting death dismantle something that took centuries to build. It's a good argument. It's just that nobody ever made it for the farm. Because a 400-acre farm held by the same family for 200 years is also an institution. It's soil one family learned by walking it. It's hedgerows somebody's grandfather laid. And when the bill comes and the land goes to cover it, that doesn't come back. Sold land never comes back. It goes to whoever has the cash, and the knowledge that went with it retires. A farmer on Clarkson's show asked the only question that really matters. What would this country look like in 5 years if there was no farming here? Here's the update. It won't be 5 years, and it won't be all of them. It'll be one funeral at a time. That's the ledger. A tractor counts, a duchy doesn't. If this was worth your time, give it a like and tell me in the comments. Should the Crown pay the same death tax as a family farm? Yes or no? And if you farm, tell me what April's rules actually mean for yours, because that's the comments section I want to read, and I read every one. Subscribe, because the British Ledger opens the books on a different British story every week. And if you haven't seen what Jeremy Clarkson actually did for British farming, that one's on your screen now. It's the reason this video exists. Cheers.